G'day, g'day. We have arrived at another beautiful morning here down in Melbourne. My name's George, and I'm going to get ready for another message of hope today. 8th of March 2026. Yes. Okay, well, a headline in news.com.au got my attention last night. It was reporting on new PropTrack modeling, that's a product itself, comparing what you would pay on a mortgage against what you could collect in rent across some of Melbourne's most sought after suburbs. I've been to those suburbs. And the headline number, the one that I had to read twice, was this. So I read it just to make sure I wasn't reading it wrong. 41 years. Which means that is how long the modelling suggests you could take for the rental income to exceed the mortgage repayments on a home in a suburb, here we go, of Mount Albert. Nice suburb. 41 years, people. Imagine, you buy that at 30, when you're 30 years old, you'll be 71 before the numbers worked in your favour. Making some assumptions here, of course. Now, I just want to make a note here. Mount Albert isn't an outlier. Right? It's not on the fringe. You've got suburbs like Toorak, Canterbury, Albert Park, Hawthorn. Another nice place. They're all sitting in multi-decade territory. And I want to be fair to the article. I said about the assumption behind this modelling. It's stated very clearly. It's 80% loan-to-value ratio, which every mortgage broker would love. 30-year loan and a fixed interest rates, compounded using a decade of historical growth. Alright, that's the modelling they came up with. So I think they're reasonable assumptions. But you see here, the gap between the prestige purchase price and the achievable rental income in those suburbs isn't a modelling artifact. It's real, fairly accurate, and by any measure I think it's enormous. And I want to use that number today. I'm not going to use it to talk it out of owning property. That is not my opinion. And it's not pushing renting as some ideological superior alternative. I'm not. But because 41 years is a number that demands an honest conversation. 41 years, I'm going to keep repeating that. One of us, well, most of us are, this is something most of us probably avoid until we actually sign the dotted line, right? Have you really thought about it? Okay. I'm happy to share that I've been mortgage free for over a decade. And honestly, I say that with gratitude, deep gratitude to God and to my wife, both whose faithfulness across those years had least much to do with any of my cleverness on my part. I'm not that clever. But I'm a good boy. But I want to be honest about what owning a home actually costs beyond the purchasing price. Think about it, right? Insurance, council rates, repairs, because things break and they don't break on a schedule that suits you, does it? Consider at a meeting price of just over $5 million in Toorak. Right? That's not unheard of. Or 2.4 million in Mount Albert, a couple of suburbs down. Someone's playing cricket in the background. I think the guy's going to catch it. Yeah, he's out. Good catch. Okay. So the arithmetic between what you paid and what a tenant would give you is so stretched, it's worth stopping and genuinely asking, what am I trying to achieve here? 41 years. I keep saying that number. So there's a worldview circulating that I want to address with you directly. Have you heard of it, that phrase, you will own nothing and be happy? Now I have no interest in endorsing that. Let me be clear. Because I think ownership matters. The Bible talks about it. Stability matters. A home that is genuinely yours is worth working towards. That's what I did. But the desire to own should come from wisdom, not from reacting against the slogan. Those are the motivations, and they should lead to different decisions. So here's what Jesus said about that difference. I'll get you to turn to Luke chapter 14, verse 28. For which of you desiring to build a tower does not first sit down and count the costs, whether he has enough to complete it? Okay, if you go a bit further back, a couple of verses before that, he was actually talking about discipleship. I thought someone went out as well. No. Okay. The discipleship, right? It's the radical cost of following him. It is really radical. But the wisdom embedded in that question reaches straight into any decision where significant commitment and significant money intersect. For anyone who wants to be a Christian, you've got to sit down, count the costs. And in our context about the home, do you have enough to complete the home, the mortgage payments? Not to start it, but to complete it, right? That's the goal. And because the decision to take on a mortgage isn't made once and filled up, you are completing it every single month for 30 years. 30 years, guys. Every repayment is an ongoing answer to the question Jesus asked. And if that question never honestly answered at the beginning, well, those monthly payments become a kind of a slow wrecking, doesn't it? So what does counting costs actually look like in practice? I'll tell you. I'll put a number on it, because vague, not clear advice is comfortable and useless, isn't it? Well, your total housing costs, whether there's a mortgage repayment or rent, I've been taught, should not exceed 30% of your take-home pay, which is your net income. So what actually arrives in your account after tax, okay? After all your, super and tax and so on. So it's not gross payment, not your best projection, it's whatever lands in your bank account. 30%, right, goes to cost, goes to housing. If the property you're looking at pushes past that to make the numbers work, the numbers are telling you something. You can choose not to listen, but they are speaking. Yeah. Now this holds equally true for renters. If rent is consuming more than 30% of your take-home income, and I know someone who's doing that, every unexpected expense becomes a genuine crisis rather than an inconvenience. The margin, the buffer has disappeared. And without those margin, the next problem becomes the last straw, really, doesn't it? Especially if you don't have any emergency fund. So the second principle I want to lay down, and I think maybe the more important one, if you're borrowing as a couple, borrow only what a single income can service. It sounds pretty hard, doesn't it? But hear me out. Because no one can guarantee both incomes would hold out. Contract ends, and you know the stories I give you, contract just ends, right? Sometimes not in favor of me. Redundancy happen without warning. It's happening right now across the world, I see. Thousands of jobs have been slashed. I think that's pretty much a guarantee. Health intervenes, oh boy. And I have lost work more than once in my career, so I know what it feels like. On those occasions, thankfully my wife stepped up as the breadwinner, and I'm deeply grateful for that. But what gave us genuine breathing room each time is the ability to make decisions from stability rather than desperation. Was that we were never dependent on both incomes running simultaneously to keep the roof over our heads. No. A loan that requires two incomes to survive is just one phone call away from a very different life. Alright? Now, of course, that doesn't apply for everybody. Some are better off than the others, I understand. Now, here's the part of the story I don't want to push past. Because when my wife and I bought our first home together, before that, we built a substantial deposit. Yep. But again, I want to give credit to her. Why not? Because of that, we paid off that mortgage in a few years. Not decades. Hallelujah. And not years. It's just a few years. I've never stopped thanking God for that too. But I guess here's the thing that still moves me when I think about it. Yeah, moves me in terms of being gratitude. Paying off that mortgage didn't just mean we own a home. It actually meant we had a choice. You see, we were able to sell that place and move on to a bigger one. And the reason is because we wanted somewhere the kids could properly grow up, play around, a bigger area. A home we set our hearts on and could actually pursue because the first one was free and clear. We had that money. And that's what counting costs and completing the building actually produces on the other side. Not just freedom from debt, no. It's freedom to choose. The privilege, and it's a privilege, really. I know that fully, of looking at the next chapter of your family's life and be able to say yes to it. Alright? And that's the compounding effect of Luke chapter 14:28, when applied faithfully. You complete the first tower, and the completed tower becomes the foundation for something you couldn't have reached from where you started. Now, I'm not speaking to those people who are pretty clever. They use certain strategies in order to build up multiple portfolio investment properties. Yep, I wouldn't knock those people. Okay, well done to them. Now, I said earlier, I'm not entirely in the own at all cost camp, and the article that I was reading actually makes a useful point here. They cite it in Docklands, South Bank, Carlton, Collingwood, Paran. And so under the same modelling assumptions, rents already exceed mortgage repayments. Yeah. In Brunswick East, the crossover takes roughly about 1 month. In St Kilda, about 7 months. So you see the gap here. So in those markets, the calculations look different. Paints you a different picture, right? So renting while you build a genuine deposit and a solid emergency fund, I think is not a failure. It's a very good strategy to have, right? It teaches you patience as well. In some circumstances, I think it is really a shrewd move. So if you've ever been made to feel guilty in a church setting for renting rather than owning, I just want to say this clearly. I totally think that guilt has no biblical basis. Don't think the question is never rent or own. So the question is whether you sat down, have a look at it, pray about it, and honestly do your calculations. Hey, smaller house, less fashionable suburb. It's not quite a suburb you picture in your mind, right? Your dream house. But a home where the 30% holds, one income can carry the load of it, it does make a significant impact. That home gives you something a prestigious address can't give. Perhaps. So it gives you room to move, capacity to choose, and eventually, if God grants the same grace He granted to me, my family, the ability to sell one completed tower and move on to another. Coming back 41 years is not a reason to give up on property ownership. It's just a reason for you to sit down and count and do your due diligence. It's Jesus asking a question He always meant to be answered honestly. My friends, whatever housing decision sits in front of you right now, whether it's buying, renting, upgrading, just staying where you are, have you counted it? Not hope and estimate it, not run the optimistic scenario and call it planning. Actually sit down and count it. Because getting back to that analogy, the tower left half built is not a it's not a monument to ambition. It really isn't. Nothing to admire about. It's just a warning to everyone who passes by, doesn't it? Alrighty, I'm going to enjoy the rest of this day, Sunday. Praise the Lord. I'll be off to church soon. I'll see you on the next one. Cheers.